Okay, so we have already talked about the fields in the BKPF table. Key fields that we covered in BKPF are also existing in BSEG. Therefore, we will just skip them. The only key field is left in BSEG is line item number, which is not available BKPF. So we will cover this one first, and then we'll focus on the rest of the fields. So let's start learning BSEG data features. Line item number field in BSEG table is the order number of line item within the document. This allows for easy reference of individual line items within the document. If you do not remember what this line item is, please check the previous topic, difference between header and item data. Most commonly, line item number field is the numeric field with a length of 3 characters. To illustrate, you should remember this picture from our previous session where we discussed mapping overview between BSEG and BKPF. In this example, we see that document contains 3 line items. Each of these line items is associated with a single leg of transaction, and line item number field helps us to distinguish and reference them accordingly. And it's also worth to mention again that minimum number of line items in one document is 2. One debit, another one is credit. And the maximum number of line items in one document can vary depending on the SAP configuration. Posting key indicates the nature of the financial transaction line and is essential for proper bookkeeping and financial reporting. Posting key data type is character with a length of 2. Some examples of possible values for posting key field. 01 is usually debit line in customer accounts representing customer invoice. 02 also for customer accounts representing customer payment with credit value. 40 and 50 are for GL level transactions, standard accounting transactions, 40 for debit, 50 for credit. And here is Z5, which is the custom created non-PO invoice credit line. Debit credit indicator defines whether a transaction involves a debit or credit line. In standard SAP, it consists of 1 character and typically allows only 2 values, either S associated with debit or H with credit. By the way, S and H letters are originating from German words soll and haben, translated as a debit and credit into English. It's important to note that this indicator is not manually inputted by end users. Instead, it's automatically derived based on the nature of accounting transaction. This determination relies on the configuration of posting keys used in the accounting document. For example, when you use a posting key associated with customer invoice, for example, posting key 01, the system will automatically set the debit and credit indicator to value S, which is debit, because a customer invoice represents an increase in accounts receivable, which is the debit entry. Similarly, when you use a posting key associated with vendor invoice, the system will automatically set the indicator to value H, which is the credit, because the vendor invoice represents an increase in accounts payable, which is the credit entry. For GL level transactions, usually posting key 40 is for debit and 50 for credit. Account types tells you what kind of account you are dealing with, and that's a big deal for your financial reports. For example, in standard SAP, A means that journal line was posted in asset account. S means that there is no subledger account was involved and it's purely GL account. D is for subledger customer account and K for subledger vendor accounts. When it comes to GL accounts, we have two SAP fields in BSEG representing GL accounts. First one is GL account HKONT field in SAP BSEG table that represent the general account associated with financial transaction. It's a key identifier for specific account involved in transactions such as asset account, liability account, revenue, expense, and so on. This field is crucial for organizing and categorizing financial data within the system. The second one is SAKNR, GL account number, which is also GL account in BSEG. In most cases, it contains the same info as the first one, but it makes some difference in some scenarios, mainly with special GL indicators, which is the out of scope of this course. For data projects in finance and accounting, HKONT field is mainly used. This field enables the system to record and track the flow of monetary values within different accounts. The field is stored as alphanumeric data type, typically with fixed lengths, allowing for consistency and efficient data processing. Both of these fields in the BSEG table offer flexibility and customization options. You might recall from our accounting fundamentals session that subledger accounts, also known as sub-GL accounts, are used to record detailed transactional data for specific business process or submodels. The key advantage of using subledger accounts is that they provide a more granular view of financial transactions, enabling better control and analysis of individual transactions. Customer account is the part of accounts receivable process. Each customer's transactions are recorded in customer subledger accounts. Vendor account is the part of accounts payable process. Vendor accounts are used to capture individual vendor transactions. By maintaining these subledgers, companies can easily track the outstanding balances, monitor customer or vendor activities, and manage cash flow efficiently. Main asset number field is used in asset accounting to represent the main fixed asset number. You probably remember from fundamental accounting session that fixed assets are long-term tangible assets, such as building, machinery, vehicles, furniture, and land that a company owns and uses in its business operations. The asset accounting model is responsible for managing these fixed assets throughout their life cycle, including acquisition, depreciation, retirement, and transfer. Material number field is used to identify materials or products. It's primarily associated with the materials management model in SAP and used to manage and track material-related information such as inventory levels, procurement, and pricing. The material master data tables contain detailed information about each material, including its description, unit of measure, stock quantity, valuation data, and more. This information is crucial for various processes such as purchasing, inventory management, production, and sales. These subledgers are linked to general ledger accounts through a reconciliation process. Each subledger and GL account has its own distinct account type. This account type serves as a tag that tells us what kind of account we are dealing with. So we already know that we have balance sheet and profit and loss related general ledger accounts. Subledger accounts such as assets, customer, vendor, they are linked to, or we can also say reconciled under GL accounts in balance sheet. In this visual, green colored elements are subledger accounts and blue ones are GL accounts. When it comes to GL accounts, we have got journals being posted there all the time. Some automatically by bots, others manually by us humans. But here is the difference. Usually we cannot just post journal in GL accounts that reconcile subledger accounts. There is a special way to do that. Usually special transaction codes are used to enter documents in subledger accounts by end user. Most of those transaction codes come under separate SAP model or SAP Finance submodules. It's not directly related to the topic of this course, but it's good to know. Now let's talk about specifics. Asset-related stuff goes into asset subledger accounts, the A type of accounts. Think about asset creation, adjustments, sales of assets, and more. The BSEG field showing asset accounts is ANLN1. So for customers, account type is D, for vendors it's K, for materials it's M. For any GL account direct posting, we will have S account type. But as in the case of GL postings as well as subledger posting, if you would like to see GL account or GL reconciliation account, you can check H, K, O, and T field. The reason why I put asterisks on material GL posting, it's because knowing how your SAP configured is very important here. There might be cases where we have account types with M for inventory, or we might have them with S type as well. And finally, remember, any posting done in Subledger account should reflect not only on Subledger account, but also GL reconciliation account. Alright, let's break this down with an example. See the first line in the document. It's hanging out in the Subledger account, in this case, the vendor account starting with 131. But the other two lines are sitting in GL account section, having S type of account. But even for the first line, we see GL account is not empty because it shows GL reconciliation account where this vendor is mapped to. It's like the bridge between the subledger and the grand GL structure. Now let's try to understand account types. So we see GL accounts which are stored in HKONT field of BSEG table. Some of these GL accounts are not standard GL accounts but reconciliation accounts for subledger GLs. If we expand those GL accounts that contain subledger accounts, it will look like this. Next, you see asset accounts under asset reconciliation GL accounts. Customer number are coming under trade debtors reconciliation account, And finally, vendor accounts are mapped to trade creditors GL account. In this scenario, customer and vendor accounts that map to GL accounts are subledger accounts. Please note that based on SAP configuration and customization parameters in your company, these subledgers and GL accounts might change. Based on the information mentioned before, account types should look like this. Please note that reconciliation accounts, where usually get subledger accounts mapped, are closed for direct posting of transactions. In order to increase or decrease balance of these GLs, you need to post document to subledger account. Therefore, account types are shown as non-available, but actually they are GL accounts. Non-available means that here you cannot get transactions posted only to reconciliation accounts directly. Reconciliation GL accounts, also known as clearing accounts or control accounts, are associated with subledger accounts. These accounts are used to consolidate and summarize the data from multiple subledgers before posting the information to the general ledger. The primary purpose of reconciliation GL accounts is to ensure that the data from the subledger matches the data in the general ledger. Here we have more examples. In the first example, we see that both lines are related to subledger accounts, where first line was posted to asset account and second line is related to vendor account. In the second example, we see that first line was also posted to asset account with the same reconciliation account, but the second line was posted to GL account. Therefore, it has account type S. Now, next example, first line is D type, customer account, and second line is again GL account with S type. And in our last example, it's showing lines both related to GL account, S type of accounts. So we already know from BKPF part that in SAP transactions are often conducted in multiple currencies due to international operations. Amount in document currency. This field holds the value of the financial transaction in the document currency in which the transaction was recorded. Next one is amount in local currency. Local currency is typically the currency of the country where the company is based, or the currency used for statutory financial reporting. Amount in local currency too is the one that often used for additional financial reporting or legal requirements. It allows for the presentation of financial data in a second local currency alongside the document currency and local currency. Usually the LC2 is used as a group currency for consolidating of all financial statements from many entities across the world, mostly using USD or Euro. In BKPF table part, we described these different currencies and also brought some examples. So in case if you do not remember details, please check it out. All these three fields are stored in a numeric data type with a length of 13 and plus 2 decimal places. Remember, these amount fields in BSEG hold only information about value, but if you want to see what are the currency keys, document currency, local currency, LC2 currencies, you should check BKPF field. You see them in your screen now. In SAP, cost objects are like financial trackers used to follow and assign expenses within a company. Initially, they are recorded in SAP FI modules, BSEG table, but their real power comes to light in SAP CO module, where they support cost accounting and control. Since cost objects are not primarily used in SAP Finance, we will not stay in this topic longer. Instead, we will just give general overview. So briefly saying, cost objects help business allocate and monitor costs related to different activities, projects, or objects. There are various types of cost objects such as cost center, profit center, WBS element, and internal orders. Profit centers are used for analyzing the financial performance of specific areas within a company. They help evaluate profitability for different segments of the business, providing insights into both costs and revenues related to organizational units. In essence, profit centers track general performance and profitability. Cost centers are cost objects designed to accumulate and monitor expenses related to specific areas, such as functional department or activities within an organization. For instance, a company might have cost centers for production, sales, marketing, or research and development. When financial transactions occur, the cost center is usually specified to allocate costs to the appropriate department. Cost centers are typically compared against predefined budgets. WBS elements or work breakdown structure elements are cost objects primarily used in SAP PS or project system model. They represent individual components within a project and assist in organizing and tracking costs associated with specific project elements. In summary, these cost objects, profit center, cost center, and WBS elements play critical roles in financial management within SAP, helping organizations analyze, allocate, and track their expenses effectively. Clearing document number is a special code that serves as a unique identifier for a clearing document. This document is automatically generated by the SAP system when financial transactions are reconciled or cleared. Clearing typically happens when you match up things like invoices and payments. The clearing document number is a 10-character code, similar to a document number, that helps us keep track of which transactions were involved in this clearing process. Clearing entry date is simply the date when this clearing document was created in SAP. It tells us when the clearing or offsetting occurred for a specific transaction. This is important for record keeping and keeping things in order. Both of these pieces of information are crucial for various purposes. They help us investigate and analyze transactions, create financial reports, maintain a clear audit trail, and ensure compliance with financial regulations. The clearing document number helps us to identify the transactions involved in clearing, and the clearing entry date tells us when the clearing happened. It's all about keeping our financial records accurate and transparent. Let's dive into the concept of clearing with practical example. Imagine we have a vendor account, Mercedes service, in our Furticorp Italy branch company code. This branch both buys vehicle parts in Mercedes service and carries out maintenance work on company service cars. Over the last 2 months, the service company issued 4 invoices to Furticorp. Now, here is the tricky part. Our payment department has already taken care of 2 of those invoices by paying and clearing invoices and payments. But how do we figure out which invoices were paid, when it happened, and where we can find the payment records? This becomes especially challenging when there are multiple invoices with similar amounts within the same vendor account. To answer those questions, we need clearing document and clearing date columns. When it comes to the clearing process itself, we will not dive into the details in this presentation. There are various options for clearing items, like posting a separate clearing document or posting a journal with clearing, among others. Additionally, the way these options work can vary depending on whether you are dealing with open items in the same account or separate ones. However, the key takeaway here is to understand why we use clearing document and clearing date columns and how they can be helpful. In the example we have been discussing, you will notice that two invoices were cleared or linked to two payments. This connection is indicated by the clearing document number, which ends with 875. The date when this clearing happened, August 26, is shown in the clearing date field. And if you ever need more detailed information, such as who performed this clearing and the specific steps involved, you will need to access the clearing document header and item data for a deeper dive. Item text field is like a little note you can attach to a specific line item in financial document. When transactions are posted, this field is used to add a brief description or extra information about the transaction line, making it easy for everyone to understand what each line item in transaction is all about. It's like providing context for the numbers. Would like to add quick note here. You probably remember document header from BKPF header data. Remember that while we have document header text for the whole document, describing the whole document, item text is for explaining individual line within the document. Assignment number field is a handy field that links financial transactions to various reference documents or numbers. Think of it as a way to connect transactions to things like payment reference, invoice numbers, purchase order numbers, or any other identifiers that help us keep track of what's going on. This field also plays a role in automation within SAP. For instance, sometimes when a payment is made, SAP might automatically put the invoice document number in assignment number field. This makes it easy for analysts or automated bots to match payments with the right invoices. In a nutshell, item text adds clarity by describing individual line items, while assignment number helps us keep transactions organized and make it easy to reconcile them with other documents and systems. This is the end of our session about SAP Finance Transaction Data Tables, BSEG and BKPF. Now you have a solid understanding of how these tables work, their significance within SAP Finance and Accounting, and features they store. Hopefully you found this lesson helpful. Thank you for watching.